The possibility of Churchill Capital's CCIV SPAC to merge with electric vehicle company Lucid Motors has been one of the biggest hyped up topics on Wall Street. Because of all of this attention and eagerness to hear of official merger confirmation news, CCIV stock has seen some major volatility over the past few weeks. And due to this volatility, it is best for us investors to tread cautiously and assess the risks we are taking by putting our money into this stock. In today's video, we will be analyzing what are the potential risks for owning CCIV stock and how you can best mitigate these risks as an investor. Let's get started. Hello everyone, this is Mark with MC Stocks. Remember to subscribe and hit the like button for more videos like this one. And as always, remember to do your own due diligence when investing and seek a financial advisor for professional advice. So CCIV stock is one of the most traded stocks currently on the market, with volumes averaging in the millions per day. With both large institutions and many retail investors buying shares of this stock, frequent swings in the stock price are expected as we await an official announcement about a merger with Lucid Motors. Take today's CCIV stock chart for example. We can see that the stock started off in the red, dipping all the way down to $30, making it at one point 10% in the red intraday. Afterwards, we saw a quick recovery all the way back up into the green, reaching a price of over $34. This means that from the lowest point to the highest point during the day, the stock swung over 14% within just a few hours. And finally, CCIV stock closed out the day back in the red, falling around 5% from its peak, down around 2% for the day, including after hours. The volatility in the stock is obvious, and timing your trades can be very difficult and costly. Let's first analyze this stock by looking at its technicals. Here in TradingView, we are on the 1-month chart with 30-minute candle intervals. We will be focusing on the RSI Relative Strength Index indicator and the MACD Moving Average Convergence Divergence indicators. So let's first start off with the RSI. We can immediately notice a pattern here with distinct areas where the RSI indicator has gone into the overbought section above the purple zone after dipping below the 50% halfway mark. With this indicator alone, you may be able to judge when the next bump up in the stock price may occur. But let's also check out what the MACD has to show. Here, we are looking for when the blue MACD moving average line crosses the orange signal line as our indicator to buy. And as we can see, the buy signals generated by the MACD matches up very well with the signals we saw from the RSI. So, using these two indicators together can prove beneficial for your trades. However, looking back in hindsight on these charts is 2020. By no means does this pattern necessarily have to continue in the future. Plus, even the intraday timing of these buys can make all the difference, like in today's example, where we saw an over 14% swing. Getting the timing exactly right so far has proven to be not too consequential, with the stock price growing significantly over the past month. But that may not continue to be the case. So how can we make better, safer investments into CCIV? Perhaps the easiest way to develop positions in CCIV without even having to look at these technical charts is to simply dollar cost average your position. For example, if you plan to invest $100 into CCIV, instead of buying your full $100 position in a single purchase, you can spread your purchase out over several weeks in multiple smaller purchases. With this method, you can save yourself from potentially buying at the top of the stock price before a possible plunge. Now you could miss out on buying at the perfect time when the price hits its lowest point, but with dollar cost averaging, you will have an averaged price position over the period of your purchases without having to time the market. But aside from general investing tips, what is our risk with CCIV specifically? Well, CCIV is a SPAC stock with a trust behind it. From the SEC website regarding SPACs, we can see that you're entitled to your pro rata share of the SPAC's trust account, and not the price at which you bought the SPAC shares on the market. This means that based on the terms of the trust, a SPAC can return to you a certain amount of money agreed upon beforehand. And we can see that on CCIV's 10Q form submitted to the SEC, public shareholders are entitled to redeem their public shares for a pro rata portion of the amount then in the trust account, which is initially $10 per public share, plus any pro rata interest and the net of amounts withdrawn for working capital requirements. We go over some of the scenarios that we think could cause CCIV to go back down to $10 in our worst case scenario video. So check that out if you haven't seen it already. Lucid looks like they have the intentions of going public given their job postings on their website. And given the connections Churchill Capital has with a Lucid board member and the Saudi Arabian Public Investment Fund, which owns more than half of Lucid, a merger deal between Lucid and CCIV seems like the path of least resistance for going public. But again, we have no guarantees that this will follow through. With the stock price of CCIV currently over $30, the fall back down to $10 would be a painful one. We cannot tell if the stock will ever go back down to that price or if it will see new all-time highs. We just have the merger rumors that have been circulating around that we've been reporting to you to rely on. The likelihood for the merger between Lucid and CCIV seems fairly plausible to follow through given all of the connections we've seen, timing of events, and reports published. But with no official announcements made, all of these pieces of evidence are just speculations, and that fact should be considered as you decide to invest. With a bearish article here, a mistweet there, and investors on the edges of their seats waiting for any piece of news, we can expect the volatility to remain as we await official news. Invest smartly, keeping in mind the ups and downs that the stock may have, and the possibility that the merger news may turn out one way or the other. If you're looking to buy shares of CCIV and need a brokerage, be sure to use our referral links in the description below. M1 Finance is doing a great offer currently where you can get a free $30 using our referral link. So use the link below, earn an easy $30, and don't miss out. Good luck everyone with your holdings, and stay tuned on our channel for any news regarding this Lucid CCIV merger. Thank you for watching today's video. Don't forget to subscribe and hit the notification bell to get notified when we release our next video. Please like and share for more videos similar to this one, and comment below with any questions that you may have so that we can address them in future videos. Thanks.